welcome everyone. Today's July 20th, 2016, and this is the John Locke M3 Tough Questions webinar. As promised, we're bringing John on, and he's going to answer the tough questions about the M3 strategy. We've gotten an overwhelming number of survey questions that have come in. So it's a little doubtful we'll be able to get questions in the chat, but I'm going to keep an eye on the chat anyway, in case something comes up where we just need some clarification. So don't be shy about typing in there, but it's not too clear that we're going to be able to get to any of the questions in the chat because we have so many that have, come in as a result of this survey. So welcome everyone. And I want to just point out real quickly that SMB Training is not a broker-dealer. We're doing this webinar for educational purposes only. Today's webinar does not contain any live or relevant positions, and any pricing you see on any demonstration we may do today are hypothetical and would not be subject to the market factors of liquidity, slippage, and commissions. When you're trading options, you have to trade very, very, very small relative to your net worth initially until you become consistently profitable and you know what you're doing, at which point then you can consider very, very prudently and very slowly increasing your capital level. Options trading is risky, and if you trade too large relative to your net worth, then you're putting your lifestyle at risk, so please do not do that. Trade responsibly. So with that, John, I think you've seen the questions, you know what is coming up. And and Bala Iyer is asking, can you briefly describe the M3 strategy? So that's just the first comment that's come in. Not sure if you're going to have time to handle it, but I'm just pointing that out, John.
Yeah. Well, anyway, I got like 200 questions. So
yeah,
and they're kind of all over the place. So I kind of tried to group a bunch to kind of chunk things down a little bit, and I'll do the best I can to get through, what I feel is going to be most informational for everybody. So we'll do that. And one of the questions that was asked a couple times is what is the M3 strategy? And
right. All right. Well, John, I'm going to share. You need to click on that share your desktop.
Yeah, I really don't have anything to share. So as far as pictures go, we will a little bit later probably.
So you're actually going to be just talking at this stage?
I don't have a PowerPoint, so...
okay, yeah, no, I was saying, I thought maybe you'd go into Option View or whatever, but that's fine. So I understand. So at the moment you won't be sharing your desktop, but you are the panelist that has the share mode. So anytime you want to go into that, you can.
Well, let me do that anyway. Let me share a screen here. And I'll drag up Option View because I should probably show a picture of the what is M3 question. So let me just go ahead and do that anyway.
Okay.
Let me drag up Option View here, just so that people have a picture. And I have this later on as a demonstration. So a M3, there's a difference between what I call an M3 trade and an the M3 trading system, and we'll kind of go over what those differences are a little bit later. But let's just take a look at an M3 trade for a minute. It's essentially a broken wing butterfly profile trade. So a T+0 line profile of a broken wing butterfly, but it's set up as a butterfly with a deep in the money call. Rather than using a broken wing butterfly, you'd have a vertical here, and you'd bring this wing in. So the trade itself is similar to that. It's something that, let me go back a little bit. I started coaching traders in 2007, right, and which was only about 18 months after I actually started trading. So I came up in trading relatively quickly. I learned it pretty fast. And one of the things that I noticed about trading options in general, when we start talking about butterflies and condors and calendars and all that, is that they react very differently depending on a variety of factors. And therefore, there was not going to be any one rule set. In other words, you weren't going to be able to take one set of rules that you could follow the same way every time and be successful. And one thing I noticed about aspiring traders is that they were looking for one rule set that they could follow the same way every single time and be successful. Now, being a success and performance coach, because that's the background I came from when I came in to start coach trading, I realized that this is going to be a problem for most traders. In fact, it was the very reason that most traders were only successfully sporadically. So I went about designing a set of rules that did well in most market conditions. And then I plugged that into a more dynamic system that gave the trader options on how to make the trade adaptable as needed. And I did this for the purpose of helping people understand how these types of positions change when market conditions change and when the pricing structure of the options change. And if you take a look at what's known as the M3 trade, right, the basic M3 trade, in other words, a trade that has just a strict rule set, the trade in itself has a fantastic track record of consistently working well over the last 9 years or so, because that's how long we've actually been doing this system. But that's not what the M3 system's about. My goal here has never been to feed somebody a set of rules. It's never been to feed somebody a single trade. My goal has always been to transform people into great traders. And the M3 system itself was designed in a manner where the trader can experiment with and utilize a variety of adjustment techniques over long periods of time, so they can understand better how a similar position might react when you look at varying market conditions, you look at varying options pricing structures, then you look at varying days to expiration, for the purpose of transforming people into awesome traders, right? So that's essentially, this is what an M3 trade starts out like, and that's essentially what the system's about. And a question that we got today, and one that I get a lot, is why can't it be less discretionary, or why can't it be a rule-based system? Well, the system isn't all that discretionary when you look at it, but yes, you could make this a straight one-page guidelines trade. As a matter of fact, I do have a one-page guidelines set up for it, and you get the same results that you get with any other really good trade. That it works in most that's rule-based, and the results would be that it would work well in most conditions. You'd have periods of time of great performance, and you'd have periods of time of terrible performance, and you would be missing the whole point of trading the M3 system. So, which is to transform you into a great trader. And so it's important to understand where I'm coming from here. Like I said, I'm not trying to show you a rule-based trade. I can show you a rule-based trade in an hour, and you could go trade it, and it would work very well in most conditions. But you're going to have these periods of time where it's just terrible, and you'll have these periods of time where it's fantastic. Let's see. Another question: can it be placed every month? Yes. You can do an M3 trade every single month. There's really no market conditions where I would tend to completely avoid the trade. You can also place it every week. In other words, you can scale into, you can do a different expiration week every week as they come up now that we have weeklies. So every month, every week would be fine. Let's see here. Another question I got is, what is the best way to trade it if I can't watch the market all day? Which is a great question, but the reality is I encourage you not to watch the market all day. In fact, the system was designed around not watching the market. If you were to come in here and you take the rules that we have and you were to trade, watching the market all day, and not only would you get worse performance, but you'd also get worse fills on your adjustments and stuff like that. So I highly recommend that you do not watch it all day. So that really should not be a problem. We recommend checking it once a day. And that time of day doesn't really matter. That was another question I got, is what time of day, should we check the trade? Because a lot of people who do this know I recommend only doing once a day. And in reality, it can be any time. I would say after 10:30. Generally, we want to stay out of the first half hour or so of the market because prices are kind of crazy there, and it's a little tough to trade that section, and you might want to avoid anything after 3:30 because we start to that's Eastern time, because we start to run into market close and you might not get your stuff done. So, but any single time in between there is fine as long as you're not watching it all day long. Let's see here. So I got some entry setup questions that basically revolve around the ideal conditions for entry in an M3 type of a trade. Are there any technical analysis entry points or directional hedges for a better outcome, and that type of thing. Generally, any options trade you have, whether it be a condor or butterfly or a broken wing butterfly, whatever it is going to be sensitive to the way they happen to be pricing options at any given time. Generally from a charting perspective, if you're in a broken wing butterfly configuration trade, which the M3 is one of those, you generally want to enter the trade when the market's usually coming down, and usually at the top 3 quarters of a cycle. So if you can look at a chart and you can identify a market cycle, so say you take a look at your charts and you notice the Russell's been going up 100 points, or whatever index you're trading goes up 100 points to 150 points, and you're up 100 points now. Generally that's a good time to enter a broken butterfly type trade if you're looking at technicals. Generally higher volatility is better to a point. So extreme low volatility is generally is poor conditions for pretty much any neutral trade. It's particularly poor for a broken wing butterfly profile trade in general. So that can be problematic. So those would be entries where you'd be maybe want to take on less risk, or you have a lower probability of a good outcome. Where higher volatility, you generally have a better thing. So higher volatility, up near 3/4 of what the average market cycle's been, and that would probably be the best type of thing there. So the next thing we have is, can the strategy be modified for smaller accounts? And in the program, we primarily deal with a $50,000 position, which I realize is large for some people. We do that because we have a single Russell call that we're using to hedge this off, and realistically you need to get it into about 10 butterflies most of the time in order to be able to withstand the delta of a deep in the money call. What you can do is you can do 2 things. You can trade this with 1 Russell butterfly and an IWM call. It's a little bit different to manage. You don't have the incremental adjustability that you tend to have with a bigger position size. That's one of the catch-22s of options trading. The bigger you trade, the easier it is to move stuff around. So and adjust more gradually, and that's awful difficult with small positions. But doing it that way, you can get down to a $5,000 position, as little as $5,000, by utilizing with IWM. The other thing you can do, and it's included within the program, is something we call an M3U trade. One of the things you'll find out about the M3 if you really get involved with it is it's not this single trade. It's a whole concept, and it actually encompasses about 40 different trades that I have. In the program, we were learning a classic M3, but if you choose to go further than that, and a lot of people do, and we get into all the different variations. Well, one of those variations is what we call an M3U, which is essentially a broken wing condor, and that can be done with a single Russell contract for $5,000 as well, and you don't have to deal with IWM. It reacts slightly differently, but that's the whole idea behind the program itself, is to enter, broken wing butterfly, broken wing condor, butterfly with a call, to be able to trade all those types of positions and understand which one's better and which one's worse for a specific environment. So that's what we have with that. I think that answers that okay. Let me know if you have any ideas, Seth. You can jump in as well.
Yeah. No. Well, John, I accidentally muted you while unmuting myself. Can you hear me now? Wait a second. Hello?
Yes.
Okay. Yeah. No. Thank you, John. I appreciate that, and I will jump in.
Okay.
One thing, actually, I did want to say something, but didn't want to interrupt your flow, which was that even though having a larger position allows you more gradual, movement of, adjustments, I don't know that at the end of the day that makes it that much of a difference in the outcomes. I don't know how you feel about that, but I feel like even if you couldn't do things gradually most of the time, it would work out, and actually sometimes gradualism gives you a little bit of a worse outcome. So I'm just saying I don't think people should get discouraged about trading smaller and not having as much flexibility, because I don't think at the end of the day it affects your returns all that much.
It might if you get into a situation where you have to you hit a. In other words, you could on this trade you might literally hit a point where if you roll where you're past your maximum delta guidelines, but if you rolled one contract out, you would be too far the other way.
I see.
So that can happen with like one contract, but it probably wouldn't happen with three, or if you went to six, right? So there is a point where size starts to be where you want a little bit more, but I think in general you're right. Sometimes you can get hurt more trying to be too gradual rather than just taking the big bite and getting it all done at once.
Right, and so you wonder whether, on balance, it kind of washes out anyway, and I just didn't want people to get the impression that is that big of a deal.
Right, and I agree with you fully. So awesome.
Good.
All right.
Okay.
All right. So this is a question, and I got a couple of these, but we'll just start with this one. Advantages of an M3 against a road trip trade. I don't know if everybody here knows what a road trip trade supposedly is. It's just a broken wing butterfly. So, let me just say first, the M3 trade is essentially what we call a broken wing butterfly profile trade, as I said earlier. That was developed a long time ago, 2007 I put that together. Now, previous to developing the M3 trade, I developed multiple broken wing butterfly profile trades that were literally started as broken wing butterflies. And the very first trade that I developed was something called a UB1, or my first version of an unbalanced butterfly. The road trip trade is essentially identical to a UB1 trade. And the only meaningful difference between a UB1 trade and a road trip trade is the fact that a road trip trade is entered every week in varying expirations. And back when I developed the UB1 trade, there was no such thing as weeklies. So obviously we weren't doing it back then. But we did actually scale in through time using monthlies. So very, very similar trade. It's virtually identical. Now, the UB1 trade is a good trade. I've been teaching it to one-on-one clients for almost 10 years now. But, it's just that. It is a trade like any other trade, and it has its pluses and minuses. I developed the M3 trading system because I was looking for something that was more dynamic, something I could use as a learning tool to help traders better understand how to effectively manage a position, right? And that's why, and that's because a rule set that may happen to be working great today if you take an individual rule set, which we kind of talked about already. So something that might be working great today often turns into a complete disaster tomorrow when you throw it into drastically different market conditions. Well, the M3 trade is going to be affected by different market conditions too, but it's at the same time it's designed to be adaptable and to teach you how to identify when that happens and to react to it in certain ways so that you know what to do about it. A goal with the M3 is to get you to be a dynamic, self-reliant trader who can think for himself or herself and adapt to market changes. So, and the reason I do this is because if you ever want to be a full-time trader and rely on that income, right? You don't want to be depending on other people for a specific rule set, and you certainly don't want to be trading like trade alerts or hoping and praying they keep working when your survival is at stake. You want to know, you want to learn how to trade, you want to learn how to adapt, and that's what our whole series of trades is designed to do, and we've had great success with that. So, that's, to me, that's the advantages of that. Option View versus Option Net Explorer for ONE. So people who are not so familiar with this stuff, there are multiple ways you can analyze a trade. You have brokerage platforms that have analytical tools. You've got two major companies, Option Net Explorer and Option View, who put out analytical software. And we recommend Option View as an analyzing tool for pretty much any options position that's more than a complex vertical. And that includes the UV1 trade or a straight broken wing butterfly. It includes the M3 trades. Sometimes the other tools work okay. You're going to find when you start comparing the systems, I think when people start initially trading, they start thinking, they look at this T+0 line between platforms and they think they're all the same. And they're not. If you look at them, Option View, you can have 45 different T+0 lines depending on how you set the settings in the program. And if you look at Option View versus Option Net, it's different. If you look at it versus Thinkorswim or something like that, it's different. And through years and years of training with people and doing all kinds of different trades, condors, calendars, butterflies, broken wing butterflies, M3s, you just get much more consistent and more predictable T+0 line profiles with Option View. Not that they're perfect, because they're not. You still get a lot of variances from reality from Option View, but that's certainly been the most consistent over time. And we highly recommend you go with that system over anything else that's available right now. Sometimes it doesn't make a big difference. Other times, especially in extreme low volatility, Option View tends to predict what's going to happen with the. I think it better predicts how the skews are going to affect the T+0 line if certain things happen. And then that's when a lot of the other systems kind of really go out of whack. And again, it's less sensitive, or less so with a straight broken wing butterfly, although it still makes a big difference, especially in low volatility. But the M3 is a little more sensitive to that, so we definitely recommend you get into a Option View type system for that. All right, what specific guidelines have changed in the standard M3 course? Really, very little's changed. Like I said, I put the trade together in 2007. I was teaching it one-on-one for that period of time, and then in 2012 we came out with the program. And since then, we had some mechanical changes. When we did the program, we had certain margining rules that have changed, and it allows us to do things like put verticals instead of call verticals, which I would have rather have done, but at the time of the program, it created a margin problem. That's actually still the case for some countries, so it's not bad to see it done that way. But that's one of the issues. We also had some changes in the way the market makers were pricing options over the years, and we've had some changes in analytical software over the years. So, that being the case, we tightened up the delta limits outside the tent. In the program, so we, depending on the location of where the price is within the on the trade relative to the tent, we have differing delta limits and so forth that we put on the trade. We're actually going to be doing a class on all the updates or any changes that we have, and we're going to add in some of the other variations of the M3 as well, at least one other variation. I can't go over all of them. We had this class. The M3 has so many different variations. We had this class in Manchester, New Hampshire. It was 2 full days, and a lot of it covered different variations of the M3. So there's a lot of different things that can be done with the trade. But that said, we'll be going over at least one of those variations in the update webinar, as well as any kind of rule changes. And let's see, we have, again, right, this is the other thing with referring to a road trip trade with an M3. Both trades, the M3 and the road trip trade, are what we call broken wing butterfly profile trades. The road trip trade is literally a broken wing butterfly. And again, in general, under most conditions, they tend to react in a similar manner. And like I said earlier, road trip trade is essentially a UB1 trade, which we've been teaching since 2007. So I have a ton of experience live trading a very similar position to what that trade is. And if you were to look at both trades as trades, in other words, if you were to take and put a hard rule set on them both, you'll find the road trip trades more simple in structure. But that being the case, it also has a very subjective rule set. In other words, there's no firm rules for the road trip trade either, which is fine, right? The M3 doesn't have very firm, strict rules either, and nor should they. But if you were to stick to a solid set of rules for each trade, if you were to just nail down a specific level at which to do everything every single time, you'd find they both work out well a majority of the time, while one trade or the other might perform better in a specific environment. But when you loosen the trades up a little bit, when you break away from holding a strict rule set, and you really learn how to trade, you're going to find the M3 trade to be much more dynamic and adaptable to condition changes. In fact, you could even argue the UB1 trade itself is within M3 trade. It's within the M3 system. So it's almost like a smaller part of the M3 trade. So, I started mountain biking about 10 years ago, and when I first needed a bike, I went to a bike shop because they sell good bikes, or at least they're supposed to, right? So, I'm looking at the bikes, and they were like $3,000. And, I looked at this bike, and it looked just like any other bike to me. So, I asked, why are these things so expensive when I can go down to Walmart and I can buy one for $200? And the guy, he listed all of these reasons why I needed this $3,000 bike. And, of course, I thought that was a bunch of crap. So, I went down to Walmart and I picked out the best bike they had with like $300. And, I thought it was great. It was a lot of fun. I saved almost $3,000, and I thought, and everything was going fine until I got a little bit better at riding, and I started to do more advanced things, and I joined this mountain biking club, and the guy there told me, he goes, well, you could do a lot better, you could perform a lot better and do more things if you had a better bike. And he told me that the parts on the bike I had, while they're okay for certain conditions or a beginner, they're literally dangerous with the type of riding I'm doing. I didn't believe him. Until one day when I followed him off this jump, off a ledge, and the bike I had literally broke in half. And I was injured. Luckily, I wasn't injured that badly. It was only minor, but I was definitely injured. But something like that opens up your eyes. And, as soon as I was better, I went down and I bought that $3,000 bike. And I can tell you, what a difference. My performance was much better, and it opened up a whole new world of possibilities for me. And for aspiring traders, there's a lot of learning in an M3 type system that you simply don't get in a straight broken wing butterfly configuration type of trade. Plus the M3 trade or the system itself is proven. I've got students who've live traded this since 2007. I mean, think of the variety of market conditions we've had over the last 9 years. It's been crazy. Of course, my UB1 trade or my straight broken wing butterfly trade has been traded through the same conditions as well. And I've gotten to see them side by side, and that's a great trade too. But if I had to choose, one trade over the other for the whole period of time, at any given time one might outperform the other for whatever reason. But if I had to choose between the two for the whole period of time, it's really a no-brainer. I have to go with the M3. It's just a really easy choice. So that's why I prefer that over just being confined to, just the limited thing of a UB1 trade. Let's see here. How does John, that would be me, use options, implied volatility, and skew information and adjustments? And how do I use that information on entry? There's been a lot of talk in chat groups about IV skew on butterflies and so forth and stuff like that. And, a lot of this stuff goes under the category of an old saying my dad used to tell me. We're drowning in information and we're starving for wisdom. Traders, they're hungry for more and more information. They're scouring trading groups for all this crazy stuff. And the reality is 95% of the theory that's going on in these groups is not going to help your trading results at all. In fact, a lot of the times it distracts traders from things that really make a difference, and it actually makes things worse. And yes, I'm guilty of this at times myself. I get into technical stuff, and at some point when I get involved with something, I say, you know what, this is really cool and it's really interesting, but it's not going to help me trading. That's where I put this information. I put this information of, it's interesting, but I don't think it's going to help me in trading. So in short, I don't look at it at all. However, I do generally know how the trade is going to react during my trade and when I put the trade on. And again, this is part of the magic of the M3 system. I know how it's going to react by the way I need to enter the position and balance out my T+0 line. So, a lot of the times people are going to tell you, put the trade on this way or the same way every single time, and then make an adjustment if you need to. With the M3 trade, we don't do that. We want a certain T+0 line. We want a certain range that the T+0 line is flat, and we want it to look a certain way. And the way we have to enter the market in order to give us that T+0 line is going to tell us a story. And it's your job to interpret that story and decide what it means for the trade. It's a completely way of looking at things, and it's why the M3 trade itself, or the system itself, has been responsible for creating so many great traders, because you can come in here and by the way you need to put on the trade to create the T+0 line, that's going to tell you a whole lot about the skew and everything else that you don't really need to be worrying about going into these crazy charts and looking at crazy numbers. Next question is, can I show an example, an option view of a 2016 M3 trade, and we're at the start, 56 days to expiration, and how the upside was handled with Russell in the past, up past 1200 or to where it is today. And the answer is, let's just do that. Let's do a quick look at this, and this is set up for it right now. So this is our entry on a Russell M3 trade that is 56 days expiration. And we can kind of show you how this works. Now, one of the things here is this was Brexit day, right? The market's down 45 points. A lot of the teachers are telling you, oh my God, stay out of the market. We don't know what's going to happen. Realistically, this is one of the best days you could possibly pick to enter one of these trades. We have very high volatility. We have a lot of fear in the market. And generally, options pricing is very, very good. And that would have been the case whether you entered it as an M3 or you entered it as a UB1 or a broken wing butterfly or whatever you want to trade. It would have been a very good day to enter. So, just an example of that, the following day on Monday, we got another hard down move in the market. Trade's actually up money. Didn't bother it. I ended up rolling this back in the example. Realistically, I didn't necessarily need to roll this back, but the guidelines in the system do say to roll it back. But here's what the position looked like as of end of day Monday. I could have, hedged it off with put positions or something, or with puts, which again is an option within the program. So within the program, we have the option to roll back. We have the option to maybe do some verticals. To straighten our delta out, get us a little bit back behind the market. We have the option to sell the call. We have the option to roll back. The most common move that you see is doing a rollback. So here we just pulled the position off and we rolled it back. Now pricing is actually less favorable on this particular day, and usually when I roll back I do maintain positive delta. And that puts us in a position that looks like this. So now we're ahead of the short strikes. And then of course on the reversal, I lowered the number of butterflies. Usually we have 10 butterflies to one call. We did 16 simply because that's how many butterflies it took to hedge off the call. So that's how that goes. And then if you won't move forward the following day, Tuesday, you notice a big profit and loss, a substantial profit and loss increase. This was actually a bad day to enter a position because the pricing was high. And you can check if the pricing's high just by watching the position from day to day. Then Wednesday, again, was another poor entry day. It's actually probably the worst entry day. We're actually, again, position gets to be up money. Looks like that. And just let me see what days we had significant moves because I don't want to spend all day going over this, but I'm just showing a quick example. So let's just go to like the 8th. Right, we had this crazy market capitulation. We started here, right? We had to roll back here. We didn't have to roll back, but we decided to roll back there, mainly because that was the worst choice happened to be at that time. So it's good for demonstration purposes. We did the rollback here, and now we're 100 since our rollback bottomed at around 1080. We're up almost 100 points off of that. We've come up here and we've rolled the position up several times, or at least once, and reduced our size. So we rolled up to here, and again, as the trade goes by, if you start out with a lot of contracts, you generally drop down, and we end up in a market that looks like this. And then from here, because the market's been so bullish, we've actually dropped out, I think, some of the profits a little bit here. But then we go into this position here, and I think this was rolled up again on Monday, where we've rolled up to this position. And of course, with today's moves, we're slightly outside of the tent again here. Oh, I'm sorry, this isn't that far yet. This is what it looked like here. I'm on the wrong day. I didn't realize it was that late in the year. Okay, Tuesday, that late in the week. Right, then as of today, we look something like this. So, very broken wing butterfly profile, flat T plus zero line in general. The difference between this and a UB1 trade is this trade can lose to the upside. Generally the upside losses are going to be very small and mild compared to most of the time. They're generally not large, but it can. Where a lot of the times with a UB1 trade, you might not lose to the upside. But this has, like I said, other advantages. Like if the market happens to stall, I can still hit my profit target. Whereas if I was in a UB1 trade, I'd be all the way back here. I'd be trying to scrap out $1,000 out of a trade. So, or maybe a little bit more than that. So, depending on what the market does, depending on which exact profile of the M3 works better. But this one here is, this is what we have so far this time. And let's see, what else do we have? So I have some questions. I get a lot of questions a lot of the time. Can I use a deep in the money call spread rather than? Can I use an in the money call spread or put vertical spread instead of a deep in the money long call? 624.16. That's going to go back to the beginning here. And the answer is, yeah, you can. You're going to have a trade that reacts slightly different, but a trade that is still within an M3 concept. So instead of entering this way, and I actually did a weekly call, by the way, in this particular trade. So you can do calls in the classic M3. We're doing them in the same month, but in this particular trade, I did them in the weeklies. Again, that's just a variation. But I can get rid of this call, and I can do verticals. Now, I probably wouldn't want to do it at the same strike level. Usually, I'm going to look at coming in here. I was going to look at a trade for a sec. I'm going to look at coming in here a little bit further behind the market. Right, and I can come in here and if I want to do it the same size, I do something like this, -16 and -16. If I look at the trade, whoops, something is going on there. Take this out. So if I look at my existing and I look at the trade, for some reason it's giving me something. Okay. Yeah, so that might be a little bit too much in this particular instance as far as that goes. But 0 -32. But essentially, we could end ourselves up in something that looks like this, which is an M3U BWB trade, which would probably be the only way I could enter this. We have the classic M3U trade, which typically is going to look like, oh, there it is. Okay, so let's, for some reason it didn't give me what I wanted to do. The analyze graph on here goofed up. Oh, maybe because I'm not, I'll say 1, 2, 3, 4, 5. 1, 2, 3, 4, 5. Okay, here's our classic M3U BWC trade. Right, so we can come into here something like this and make the same delta correction. This again, we have an M3U in the as part of the M3 trading system, and it's in a bonus section, and you can certainly utilize this trade instead, this configuration instead of that configuration. It would be adjusted essentially the same way. We'd be rolling out verticals, we'd be rolling up, and we'd be keeping our delta relatively flat. You might want to actually flatten this delta out a little bit more than what's here, but I think you get the point. So this is just would be referred to as M3U trade. It reacts a little bit differently, slightly differently than the M3 position, and that's a good thing, because what we want you to do in the program is we want you to experiment with this. We want you to experiment with the broken wing butterfly configuration. We want you to experiment with the call and butterfly configuration and see what works best when, so that you know when best to apply it. Let's see, clear trades. And I'm going to move forward with questions. How do you decide if you're going to adjust with verticals by moving up the shorts versus rolling in some of the high delta longs? I love this question, right? So if we get into an M3 trade, for example, and we get into a situation where our delta gets too high, the most common adjustment is to roll the shorts forward. Another adjustment we often do, especially late in the trade, especially if we're in an M3U configuration, is we'll roll these back. Right. Now, one of the things that I'd like to just say is that that's awfully limited thinking, very closed-mind thinking. The reality is this vertical can go anywhere. This vertical doesn't have to go here. It can go here. Right, it can go here. Or it can literally go here. The question is, what do you want to do? Right, so depending on exactly what you're trying to get out of the adjustment is going to determine exactly where you want to put the trade. And one of the ways to tell which one is better is, for a specific situation, is just to simply model the adjustment itself. Are you looking for a situation where if the market explodes up that you're going to have a higher T+0 line? In which case, adjustment like that would be very good. In other words, am I trying to limit losses? Generally, if for the most part, if I'm doing back here or this far high, generally for me, it's a adjustment to limit losses, because what I'm doing is I'm making my tent more narrow, and I'm decreasing the likelihood that I'm actually going to make more money, except for the very little bit amount of money that might happen to come from raising the expiration graph a little bit higher. When I'm doing it back here, I am widening my expiration tent and giving myself a better ability to make more profit should the market stall. So, putting a vertical way up here, again, has the benefit that if the market really takes off, it's very effective at raising the expiration graph and but it's very ineffective at actually gaining more profits unless you go positive delta, in which case, you're taking on the downside risk. It's also better, for example, it's better for me to do one up here if I think the market might reverse on me, because these don't really have much risk in them if the market reverses. On the flip side, if I'm here, I'm going to do better if the market stalls. I'm going to do better if the market maybe creeps up a little bit. It keeps my tent closer to the market, so if I get a normal pullback, that I'm going to make more money. But on the flip side of that, if the market really takes off to the upside, it's not as effective at raising my expiration graph. And if the market really pulls back hard, it's going to be it has more to lose, so it's going to be more affected by a large move. So depending on exactly the type of move you want to protect yourself against, is going to determine where you want to do that. Which leads to the point that some people say, well, I just want to win all the time, and that's not an effective way to look at things as the trader. The best thing you need to do is just pick the points at which you're willing to lose, and then trade to that, and trade around that. And that way, it's going to help you determine a goal for the trade, so that you can make more money under most conditions and actually be a better trader. So anyway, that is what I have with that. So let's see. What do we have for time there, Steph? How much time do you
John?
need?
Well, I need, I guess, 5 to 10 minutes towards the end. So
okay,
you can
so
certainly
about
go on.
another 7 minutes.
You have another 7 minutes, and I'm going to hold you to it.
That's okay. I have plenty of questions. So
that's fine. That's fine.
So another thing that people talk about is rolling positions. So if I go to today with this, for example, if I go to 624.16, not 624. What is today? Today's 720.
Today's 720.
2016. In this system here, we do rolling. We in other words, we take the position and we roll it higher. Again, this is all designed to help you become a better trader. When you first start trading a system like this, you start looking at butterflies and calls. After a while, you don't really care where the shorts and the longs are. In other words, you're not in a position that looks like a butterfly and a call. You're in this position with options all over the place, and a lot of people don't know how to deal with that. But when you first start with the system, you're generally going to stay in butterflies and broken wing condors and calls. But a lot of times we'll have to roll this up. We'll have to bring it further forward, and people will do something silly like take this whole position off and then try to put the whole position on. And in the process, you're taking this huge amount of risk in delta, because if I'm minus 32 delta now and I have 100 delta call and I pull this off, I'm sitting there with 100 positive delta and hoping the market doesn't move while I put the rest of my position on, and that's typically not a very smart thing to do. So, one of the things we do is we try to adjust in as flat a delta manner as possible, which isn't necessarily all that straightforward for some people. So, say I just wanted to roll. The first thing I want to do is if I'm going to roll a position, the first thing I want to do is I want to decide where I want to go. I don't want to just start moving options. So if you want to pretend that I wanted to go from this position here to, say, I'm just going to put something together here. 1, 2, 3. 5. I want to go from this position to that position. I'm not going to take off this position and put on that position. I'm going to say, well, what do I have to do to get to that position? Well, I already have 4 negative strikes here, so I don't have to move 4 of those. I can take this here and I can go into a condor order where I sell 6 of these. Right, and I buy 6 of these. I buy 6 of those and I sell 6 of those, or something like that. Let's just say we're going to go to this. I'm going to write the position down. Dave actually has an excellent sheet for doing this, where you can do a step-by-step move into doing this. But so what I'd want to do is, let's move this one first. All right, so we go +4 here, then you -4 here. See, -4 here, and then I -4 here, and then I +4 here. Let me just take these off for now. Right, and that's going to put me a little bit more negative delta, but it's still a relatively safe position. It's within delta guidelines of the trade. Right, so I can do that trade, and I can convert that. And this is just, again, a broken wing condor. Right, and then I'm trying not to forget the position I wanted to go into. Then if I want to, see, I'm rolling up to 20 points, so I can do +5 and +5, -5. I'm just going to do 5 because it's going to be faster. Realistically, I should only do 2 of them because I only want. Let's do 2 of them. Let's do. I don't want to confuse anybody. +2 and -2. Okay, and I can convert that. That's going to help me be a little bit more positive delta. And then I can do my next one here. Say I want 10 here, right? So I can do -2, +2, +2, and -2. That's going to give me my 10 here, or start to get me built up there. Right, and then I'm still. Maybe I might want to go a little bit positive delta for the next adjustment. Maybe I don't. I can do. Actually, let's go more negative delta. So I can do, say, 5. I don't want this to take all day. -5, -5, and +5. Right, that's going to put me a little bit more positive delta, so I can convert that. Now, I can bring this one back. Right, a very nice convert trade, fairly flat delta manner. And then I want to bring up my other trades. I can do 3, +3, +3, and -3. And of course, this is going to throw me positive delta because it was going to be positive delta when I modeled it. So. -3. Convert trades. Right, and that just kind of gradually, smoothly running this up, and then I can just do this vertical here. So that would be a way to, just an example of a way that you could bring this up very gradually. Again, I could spend more time on it, but obviously I went to a positive delta position, but that's just the purposes of demonstration here. Okay. So it looks like a lot of orders, but it's a very safe way to do that. And like I said, you just break it down and do it that way. All right, let's see. Seth, do you have any comments or questions? I can look at some other questions, or because we have a little bit more time.
I think that there are a lot, John, but I feel like we need to wrap things up. I know folks probably didn't plan on being here for an all-nighter and so forth. So, I mean, unless you.
Well, I actually have to get going at 5:30 anyway. So.
Yeah.
As well.
Okay. Well then, why don't I just? I want to point something out about the M3 strategy and the video series that we've produced, that John produced for SMB, and a sort of a special situation we're running until August 2nd. So let me go ahead and show you exactly what I'm talking about. And basically, if you own, on August 25th, we're going to be having a webinar where John is going to be presenting some new material on the M3 that was not in the original program, and it is actually going to be made a part of that program. And so if you buy the M3 strategy before August 2nd, or if you own it already, then you are cordially invited to that webinar, and you will get an email with a link to that webinar, so you can participate in that live, ask questions, etc. On the other hand, if you do not own it, we are running a special 10% off. That's that funny number, $1327.50, and we're running that until August 2nd. So it's normally priced $1475. We have cut it down to $1327.50 until August 2nd, to encourage people to get involved and become part of John's program on August 25th. But there's another very interesting thing I think you should take note of, which is the M3 is part of a suite of strategies which includes the rock, the bearish butterfly, and then it's sort of all pulled together with the M21 series and the M21 video program itself. So we call this the M21 series. And if you buy the M3 before August 2nd, you will be able to achieve, you'll be able to get a 30% break on every other video program in that series if you buy the full series. So if you buy the bearish butterfly and the M21 and the rock simultaneously, you'll get 30% off of that price, but you've got to pull the trigger on this before August 2nd, and which is a great idea anyway, because you're going to get the $1327.50. So this option doesn't expire. If you buy the M3 before then, you'll get 30% off of every other item in the M21 series. So if you look at it, the M3 discount is $147. The value of buying it before August 2nd is that you get basically a coupon for $1,288 to buy the rest of the M21 program, and that does not expire. So it's a pretty valuable idea to go ahead and buy the M3 before August 2nd. Then you can turn that coupon in anytime you want to, including immediately. So I just want to show you where you want to go to purchase this. There's a couple ways to go. To make it easier for you to remember, you can go to m3options.com, and it will bring you to the same place. So that is a nickname, so to speak, for this URL. Otherwise, smbtraining.com/blog/M3 or m3options.com. It's going to get to the same place, and you click on here, and it gives you all the information on how you can actually go ahead and physically purchase the program. So it's a great opportunity. I think you should think about it very seriously, and we're looking forward to your getting more involved with trading the M3 and the rest of John's brilliantly designed strategies. So we're going to be posting this webinar, by the way. So if you want to watch it again, you'll be able to do that. And we look forward to working with you to make you the best trader you possibly can be. John, did you have any final comments, or is this a wrap?
Well, I'd just like to thank everybody for showing up for our little informational webinar here, and make sure you come in and join us for the update webinar, which of course is going to be included in the program, right? So for
that's right.
Owners, so
present and future owners will have that in the program But if you own the M3 or you buy it before August 2nd, you're going to be invited to participate in live, which is really very valuable, because then if you have questions, you can ask them, and we can tailor that to your needs within that webinar.
Right.
Very
Fantastic.
good.
All right. Thank you, everybody.
Well, take care, everyone, and we'll talk to you soon. Bye. Thanks, John.
Goodbye.
Take care.